Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to the Get Rich Education Podcast, show number 3. I am your host, and my name is Keith Weinhold. I'm coming to you live from New Orleans, where I've been attending the 3.5-day New Orleans Investment Conference. It's the 40th anniversary of this event, perhaps the oldest, most distinguished investment conference around. This particular one was billed as the investment event of the decade, and the speakers here are remarkable. While you're here in the beautiful central business district of New Orleans, it's hard to believe that Hurricane Katrina struck here 9 years ago. Well, I'm going to give you a quick rundown of the event, and it is going to go pretty fast. So, my takeaways from here in New Orleans are precious metals are still used in a lot of industry. We're consuming more metals than we're finding. Right now, the spot price of all 4 of the major metals is lower than what it costs to get them out of the ground. You can buy them for less than what it costs to extract and produce them. What it costs to extract and produce gold is $1,300, silver $20, platinum $1,600, palladium $800. China isn't telling the world how much gold they have, they just keep accumulating it. Peter Schiff, who is a brilliant and articulate economist, says that the Fed tapered QE3 just to show confidence to the public, and that QE4 is on deck. What QE means is quantitative easing. The Fed, which is the Federal Open Market Committee, just keeps printing dollars in order to stoke asset and commodity prices and values and make people feel wealthy and make them feel like spending more so that companies are profitable and they produce more. When Bill Murphy was asked what the gold price will be by June, he said it should be over $1,500. Rick Rule says that you shouldn't go buy a share of stock unless you're delighted to see it fall 30% 1 week later. Yeah, what I think he means is that you can then buy more shares for cheaper at the same fundamentals that were in place when you paid 30% more. Rick Rule says there's a name for the person that calls market tops and market bottoms, highs and lows in the market, and the name of that person is a liar. I learned that some people buy expensive watches to move expensive gems across international borders that way. Mark Skousen, who is a brilliant man, a funny guy, and he was actually named one of the 20 greatest living economists. Mark Skousen gave a sell signal on gold in 2011, and then it fell shortly thereafter, and Skousen still has not gotten back into gold. Skousen remarked that when inflation rises, the Fed will have to raise interest rates in response. It doesn't have any choice. And again, the Fed, which is the Federal Open Market Committee, makes monetary policy determinations for the U.S. Before Alan Greenspan took the stage, Alan Greenspan, the former Fed chairman, before he took the stage, Porter Stansberry referred to him as Dr. Mumbles, eliciting a few laughs from the crowd. Greenspan says that in 5 years, the federal funds rate will be considerably higher. When he was asked the question, Greenspan was also asked, where will gold be in 5 years? And his response was reasonably higher. Greenspan also remarked that gold pays you no interest, yet you pay to store it. Greenspan said the Fed is not independent, which definitely got some people in the crowd mumbling. I think what he meant is it is not independent from Congress, and Congress has control of the Fed, which some in the crowd didn't seem to want to believe. Mark Faber said that if the S&P 500 index of stocks drops 20%, there will be another quantitative easing for sure, where they're going to print more dollars. Faber also said, why buy bonds when there are stocks with higher dividend yields? If central banks keep printing, Gold can be at $5,000 an ounce, $10,000, or even $20,000, which central banks do plan to do, by the way, print more dollars. Again, Mark Skousen says that dividend-paying stocks are overlooked and maligned. He gave the ticker symbols for 5 dividend-paying stocks that could double in the next year or two, but even he gives the caveat, unless there's a bear market, they don't really have a chance of doubling in the next year or two. And hey, I don't purport to be a stock-picking show here, but the 5 ticker symbols he gave were OHI, I think that's Omega Healthcare, EPD, Main, which is MAIN, Main Street Capital is what they're called. They invest in mom and pop businesses, and they have a 6% dividend yield, and they pay their dividend yield monthly, where most dividend-paying stocks pay dividends quarterly. The other 2 ticker symbols that he gave were FCX, which is Freeport-McMoRan, and then INTC, a company you might have actually heard of, Intel Corporation. These are all dividend-paying stocks that have a chance of capital appreciation going up significantly in the next year or two. So, most of these big names were presenting in a main ballroom, and then there were breaks in the main ballroom where we went off to side presentations on another floor. I'll just mention a few of the outstanding side presentations. One was given by the owner of Force Field Energy. It trades on the NYSE, so it's a publicly traded stock that you could buy through Scottrade. Its ticker symbol is FNRG. They provide LED lighting in schools and institutions that are looking to save money and get fast returns with lower energy costs. And if you know anything about the budgets of municipalities and schools, there's probably going to continue to be a good demand for that LED lighting. Another side presentation that really stood out to me was where you make a direct investment in Nicaraguan real estate, and a management company grows coconuts and timber on the land, and you share in the profits of those commodities year after year. I'd add that international agricultural investing is probably not for the beginner, but others might consider it to own something uncorrelated to U.S. real estate. And the last interesting side presentation is owning the real estate which produces high-quality specialty coffee in Panama. The crop management and the coffee selling is all done for you. This is high-grade specialty coffee in a market that's growing 20% year over year. That is the higher-end specialty coffee market, and this has a grading system similar to wine. Coffee is the second most traded commodity in the world to oil. If that sounds interesting or you just want to read more about it, check out internationalcoffeefarms.com. So in conclusion, from New Orleans, no one can predict the future. Even the world's top experts frequently disagree. That's what I see here. So control your own future then with something like real estate that you have more control over. I'm personally giving dividend-paying stocks another look, but mostly just to accumulate capital faster between real estate deals, since real estate is where the real wealth is made. Okay, so I've discussed before about how you are the average of the 5 people that you spend the most time with, and so is your income. I make my thoughts congruent with my words and make that congruent with my actions. When I get around these guys, some of the biggest names in the entire economics, finance, and investing world, it pulls me up. It expands my content and my context in which to place that content, and it provides me with actionable ideas, some of the same ones I'm passing on to you. Doing it at an event in person like this also grows my network at the same time. Additionally, we learn about these private placement investments, and I can ask other peers that are already in those investments how it's going for them. In fact, I had another gentleman ask me about one of the investments that had an exhibit booth at the conference, one of the investments that I'm already in here in New Orleans. So even in the connectivity and internet age, there is still a great power to doing things in person. Where possible, I would like you to educate yourself that way. In addition, some of these events are just in fun places. New Orleans is a fun place to hang out and spend a few days in anyway. My wife and I even went out of town for one day, and we did a swamp tour by boat in the bayou where we saw alligators in the wild. So yeah, just get out and do it. So a couple people have asked me, why am I just giving all this information away? Do you really want to make me more successful than you? Faster than you? Yes, I do. I just spent more than a week of my time and thousands of dollars to be here and give this away. It's part of my abundance mentality. Building you up does not diminish me, and I'm just going to keep building you up every week. Building your knowledge, your motivation, your content, context, your network, connections, your awareness, your resources, and ultimately building your wealth. So, hey, well, that's a wrap for New Orleans. Hey, I hope you heard some actionable bit. And hey, I'll be back in a few seconds for the next segment here. Well, I hope that you found that New Orleans Investment Conference rundown useful and got some actionable content from it. It was a great event. I traded a lot of business cards, but my head was about to explode with all the new investment ideas that I got. So now that we hit the mindset in the first 2 episodes, and we've helped condition your mind, helping to open it up for growth, sort of thinking about how you're thinking, if you will, we're going to talk more about your compelling why, W-H-Y, why for building wealth, and how investing in real assets is a way to do it. So what are real assets? What's that? Real asset investing includes direct ownership in something, like a residential apartment building where your name or your LLC's name is on title, or a single-family rental home. But it doesn't have to be those things, though they are some of my favorite. Besides that, there are direct investments in vacant land, commercial real estate from industrial to retail. There's agricultural land that grows timber or coffee. There's oil and gas wells. There's commodities from copper to pork bellies. Then there are precious metals like gold, silver, platinum that's held in bullion form or held in coin form. They're all real assets. Real assets are sort of the opposite of derivative investments. A derivative investment means that the investment's value is derived from something. Almost by definition, it's a watered-down real asset investment. And generally, the more derived and packaged something is, the more Wall Street-ish the investment is, the more you're paying for brokers and registrations, and resultantly, your returns are often lower with derivative investments. You almost always have less control over a derivative investment as well as compared to a real asset investment. Well, the dollar represents value derived from the full faith and credit in the U.S. government, which is the greatest debtor nation in the history of the world, by the way. The dollar is what we call a fiat currency, F-I-A-T, fiat. Fiat means by decree. By decree or order, the government, through something called a legal tender law, mandates that this note shall be what we call currency. A dollar isn't tied to or backed by anything else. A dollar is a derivative. Its value is derived from something else, this full faith and credit in the U.S. government. It hasn't been since President Richard Nixon came on television on August 15th, 1971. I believe that was a Sunday night. This all happened before I was born. And Nixon, Tricky Dick, told the world that the U.S. dollar is no longer redeemable for something real, like gold. Prior to that, U.S. dollars used to say on them that it was redeemable for something real, gold. But up to that time that Nixon depegged the dollar from gold, foreign currencies could redeem their dollars owed to them for gold. Foreign countries were increasingly converting their dollars that the U.S. had paid them, and those countries, namely European ones, were asking to convert those dollars into gold. Well, Nixon put an end to that. He didn't want to keep shipping gold away from the United States, something real. Nixon reneged on our promise, the U.S. promise, to convert dollars to gold that we had made back at Bretton Woods in 1944. Nixon wanted the U.S. to hold onto a real asset, gold, and get rid of more derivatives, the dollar. In fact, today there aren't any currencies in the world directly tied to gold. That has concerned some people, And actually, in Switzerland, they're going to have a gold referendum, a vote, here at the end of November to potentially start to turn that around. So yes, we're in a world of 100% fiat currencies. Just look at the dollar today. You've probably got one in your wallet right now. I'm holding one up right here. Maybe you can hear it in the microphone. I'm going to read this dollar bill that I'm holding right in front of me. In the upper left, it reads, "This note is legal tender for all debts, public and private." That's what it says. So the US government has to tell me that a dollar is worth something. As soon as a government has to tell me by printing right on them, right on the item, that this is worth something, that's a pretty good sign of a decline, right? Well, see, with most real assets, you don't need to tell a person, let alone print right on it, that it has value like the US government prints that on a dollar. I mean, there's no need to print that on a real asset like the house that you live in. Can you imagine doing that with a house? When it's first built, they inscribe right above the garage, this dwelling sleeps up to 3 people. It has 2 bathrooms, electric, running water, and a nice living room where you can watch the NFL. I mean, it doesn't say that, this house is worth something right on it. It wouldn't say that. That would be ridiculous. What about with a car? What if Ford, Mercedes, or Tesla? I mean, they don't have to put that on a placard on the side of the car when they build it, stating that this automobile has 4 wheels, 4 seats, it runs well, you can transport your bicycle or some skis on top, plus it has a heater that works real well. I mean, right? I mean, that would be ridiculous. So owning a cash-flowing 6-plex apartment building has real value. That's easy for people to understand. You wouldn't have to print that on the side. No matter what happens to the dollar or to gold or whatever medium of exchange this country eventually uses with this continuing dollar debasement, people are still going to pay you something to live there because you're providing real value for them in that 6-unit apartment building. That's a real asset, and most anyone can understand that. Well, gold is a real asset too. However, why gold has value is less apparent to some. I mean, why does gold have value? Let's just hit that real quick. Gold is money. It's a store of value. A good way to think of it is it's sort of like a currency that you just can't go out and print more of. Gold has industrial use. It's beautiful. It doesn't tarnish. It's highly malleable. Gold has had value for millennia. When you hold an ounce of gold in your hand, there is 0 counterparty risk associated with it. Some people like gold because it's easy to hide from authorities. Gold's about the most liquid asset that I can think of, certainly the most liquid, real asset. I personally own some gold and silver, but not too much. Why don't I own more, you might wonder? Frankly, as a real estate investor, I'm used to getting paid well while I own something real. Gold doesn't pay me anything to hold on to it. It doesn't provide any positive cash flow like an apartment building does, because each month the income exceeds the expenses on that apartment building. Well, gold doesn't provide any leverage either. That is, one typically doesn't have the ability to go out and control more gold with a relatively smaller down payment. There are typically no loan programs available for gold. With the accelerated printing of dollars by both the US and nearly every major central bank of the world today, the dollar will almost certainly continue to fall in value. Inflation cuts a dollar's value in half about every 15 years. The United States has a motivation for an inflationary mandate for a number of reasons. And here's a big one that few people think about. The United States net worth is about minus $18 trillion. Yes, minus $18 trillion, the value of all of the U.S.'s assets minus all of their debts. And like Simon Black explains it, that includes every asset possible that this country has, every tree in the national forest, every tank, every bullet in the U.S. military. the value of every bridge and every linear foot of highway owned in our national highway system. I mean, every asset that you can think of, minus all of our debts, results in a number of negative $18 trillion. That's how much our debts exceed our assets by. Well, if we being the U.S., has a boatload of debt, inflating away our debt makes it easier to pay back our creditors. That's why the United States has an inflationary mandate. All right, so that's great. I mean, this is big picture, national and world stuff. What does that mean for you? Well, what that means for you is if you take out a, say, $500,000 loan for a sixplex, over time, with inflation, it is going to be easier to pay back the loan balance with these depreciated dollars. Because in 5 years, 10 years, wages are going to be higher, expenses are going to be higher, the cost of doing business and most everything in life is going to be higher in an inflationary environment where most think we're eventually going and where we have been as well. You know, the cost of most everything is going to be higher as denominated in dollars. In 5 or 10 years, then it will take more dollars to do the same and to operate the same way every day. So meanwhile, that $500,000 that you borrowed 5 or 10 years ago, that's going to continue to look relatively smaller because more dollars are flowing through the economy. You'll be buying something with today's dollars that you have locked in at yesterday's price. And you will have also locked that in at yesterday's financing terms with the fixed interest rate loan. The monthly cost to service that debt stays the same with that fixed interest rate loan. Yet there are going to be more dollars flowing and it's going to be easier to service that. Well, it also means you might want to own some gold, as over time it could take more of these depreciated dollars to own the same ounce of gold or silver. Now, if gold goes from $1,200 an ounce to $1,300 an ounce over the next month, just say, for example, understand that gold didn't necessarily go up in value. The dollar merely might have diminished in strength. In that case, you may very well have done a good thing to convert some of your dollars to gold. So realize that precious metals don't necessarily rise, however, when inflation rises and the purchasing power of a dollar is diluted because it takes more of those dollars to buy the same ounce of gold. But it generally happens over time where you have a rise of inflation and an increase in the number of dollars that it takes to buy some gold. The precious metals fluctuation in value over long time horizons, it's actually more of a measure of the level of public concern about inflation than it is any sort of direct reflection about inflation. As measured in metals prices, that's a concern that's heightened a lot in the mid-2000s, that so many more dollars are being printed, but it has waned lately in about the last 3 years. So be mindful that although buying a physical chunk of gold or palladium might be kind of cool and might provide a sound store of value for you, there are transaction costs that you usually have to eat. You often pay more for spot price when you buy, while you might have to sell it back, and you typically do, for less than spot price. You can sell it on eBay and make some of those transaction costs less steep, probably. In any case, it's just something that's interesting to keep an eye on. Go ahead and throw the Kitco app on your phone, Kitco. It shows up to the minute metals prices as they're constantly changing. They've got some good charts. The metals market is closed on the weekends. Otherwise, it's pretty much open 24 hours a day, Monday to Friday. I've used that Kitco app for years, and I know bullion dealers that use it too. I'm often exposed to persons that are gold bugs and think that the United States is in for a precipitous decline, especially in relation to the dollar. The U.S. has a lot of problems, but my thing is that the U.S. has a long way to fall. But I do stay a little bit hedged in precious metals just in case. So, one thing you might consider doing if you've got a few extra dollars is storing your emergency fund into precious metals. You're less likely to use those funds for something other than an emergency then too. If you want to learn more about gold and silver, I'd suggest Mike Maloney's hiddensecretsofmoney.com. He's got some content-rich, smartly produced free videos there. So if we're focused on building wealth, which we squarely are doing here at Get Rich Education, we want to primarily surround ourselves with assets of lasting value. We don't want to store a stack of dollars where inflation constantly erodes its purchasing power. We do want to get dollars, though, and then rather quickly convert those dollars into real assets that produce more dollars through cash flow as we hold on to them. Then use that cash flow from the real asset to convert fiat dollars into even more real assets. So that's it for the importance of building stable and lasting value through real assets instead of the more volatile and often less lucrative derivative investments like stocks. This is sort of a throwback topic, but it is a vital one to understand, helping to build your compelling why. Tune in next week where we do a much more cutting-edge show. We're going to answer some of your listener questions about just how to get started in real estate when you have little or no money. We also discuss how to get started in a business venture if you have a business idea when you have little or no money. I give away some of my best online resources about how to get business ideas and then the online platforms for those business ideas so that you can start earning income to invest in things like real assets. One more quick thing until next time. Keep in mind, if you aren't healthy, you aren't wealthy. I got a reminder of this when I spent 9 days at a New Orleans hotel here where the number of people showing up for the complimentary breakfast outnumbered the people showing up to the complimentary gym about 75-1. You're going to live a long time and you're going to want to since you're increasing your chances of having an abundant life. So remember that you have a body that carries around all of these thoughts and ideas. Until then, go out and don't quit your daydream.
You've been listening to the Get Rich Education podcast, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.